Right now, your bank is taking your money, lending it out, and getting rich on it, and paying you almost nothing in return. If you're with one of America's biggest banks, your savings are probably earning 0.01%. That's $1 a year on $10,000. Meanwhile, other banks, just as safe, federally insured, are paying more than 4%. On that same $10,000, that's over $400 a year. Same money, same insurance, 400 times the return. That gap isn't an accident, it's a business model, and most people never even realize they're on the losing end of it. So which banks are quietly working for you, and which ones are quietly working you? Today we rank the best banks in America and expose the ones counting on you never checking. Let's follow the money. I'm Don Blake, and this is USAFinance, where we hand you everything you need to get, keep, and grow your money with nothing but sourced facts and plain English. No hype, no hidden agenda, nothing for sale. Today we're doing something banks would rather you didn't, comparing them head to head, the giants, the online banks, and the credit unions, on the three things that actually cost you money: interest, fees, and access. By the end, you'll know exactly where your money should live in 2026. Every number on screen comes from the FDIC, NerdWallet, Bankrate, and the bank's own disclosures. If this saves you money, do me a favor and subscribe. Let's get into it. Start at the top. 4 banks tower over American money: JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup, the Big Four. Between them, they serve roughly half of all households in the country. Odds are, that's your bank. Together, the Big Four hold about $10 trillion in assets. JP Morgan alone holds around $4.4 trillion, making it the largest bank in America. These are the names on the buildings, the stadiums, the ads. They are, without question, the biggest. But here's the question this whole video answers: does biggest mean best for you? Because size and service are two very different things, and the gap between them is exactly where your money leaks out. Just how concentrated is American banking? The 4 biggest banks hold about $10 trillion in assets, roughly 40% of the entire U.S. banking system. 4 banks, 40% of everything. And the top 15 banks control almost 78% of all deposits among the 50 largest, so a handful of giants set the tone. Here's what that means for you. Because they already have your money, your paycheck, and your app on your phone, they have very little reason to compete for you. Inertia is their best product. The good news? All that competition they're ignoring is happening somewhere else, at smaller and online banks fighting hard for your deposit. And that fight pays you. Here's where it gets personal. The single biggest way a bank quietly costs you money is the interest it doesn't pay. According to the FDIC, the national average savings rate in 2026 is about 0.38%. That's already tiny, but many of the biggest banks pay far less, as little as 0.01%. On a $10,000 balance, 0.01% earns you $1 a year. $1, not a month. $1 for the entire year. Your money is sitting there, being lent out at much higher rates, earning the bank real money, and handing you back a single dollar. Your money isn't lazy. It's working hard, just not for you. That's not a savings account. That's a storage locker that charges you in lost interest. Now here's the part they're counting on you not knowing. While the giants pay 0.01%, online banks in 2026 are paying more than 4%, over 400 times as much. Bankrate's top savings rates run around 4.15%. So let's put real numbers on it. $10,000 at 0.01% earns $1 a year. That same $10,000 at 4.15% earns about $415 a year every year for doing nothing different. Over 5 years, that's the difference between $5 and more than $2,000. And it scales. Put $50,000, a healthy emergency fund and savings in that 4% account, and you're earning over $2,000 a year versus $5 at the big bank. It's the easiest raise you will ever get, and it takes about 10 minutes to claim. So why doesn't everyone? 2 reasons, and the banks are betting on both. Why can online banks pay 4% when the giants pay almost nothing? It's not charity, it's math. Big banks carry enormous costs, thousands of branches, tellers, buildings, and billion-dollar ad budgets. You help pay for all of it through the interest they don't give you. Online banks skip the branches entirely, so they pass those savings back to you as higher rates. The second reason is simpler: inertia. Banks know most people never switch. They know a savings account is boring and that changing it feels like a chore, so they quietly leave your rate at 0.01, betting you'll never notice, never compare, never move. This whole episode is about making sure that bet doesn't pay off. But wait, is an online bank actually safe? This is the fear that keeps people parked at 0.01%. Here's the answer, and it matters. In the United States, deposits at any FDIC-insured bank are protected up to $250,000 per person per bank. That protection is identical whether the bank has 5,000 branches or none at all. $1 at a giant bank and $1 at a reputable online bank are equally insured by the full faith and credit of the U.S. government. So an online bank paying 4% isn't riskier, it's just cheaper to run. And here's the reassuring part. Since the FDIC was created in 1933, not one penny of insured deposits has ever been lost. Not in the aftermath of the Great Depression, not in 2008, not once. So always confirm that FDIC insurance, or NCUA, if it's a credit union. Once you do, the safety excuse disappears. Interest is what banks don't pay you. Fees are what they take on top. In 2026, the average overdraft fee is about $32 for spending money you didn't have for a few days. The average monthly maintenance fee, just to hold a checking account, hit a record $13.51, and an out-of-network ATM now runs about $4.64 a pop. Added up, and a single overdraft plus a year of monthly fees can quietly cost you well over $200. More than 160 of that just to be a customer. And these fees tend to hit hardest the people living closest to zero who can least afford them. Here's the good news. Nearly a third of checking accounts now charge no monthly fee at all, and many banks have slashed or killed overdraft fees. So paying these is now a choice, one the right bank lets you skip entirely. So who actually gets it right? Let's hand out some awards using NerdWallet's 2026 rankings. For best overall bank, the nod goes to SoFi. The appeal is simple. It puts checking and a high-yield savings in one place, pays a competitive rate, and skips the account fees the giants still charge. It's the model of the modern bank. No branches, higher interest, fewer fees. And that's the theme you'll see all day today. The banks winning on your money aren't the biggest names. They're the ones that decided to compete for you instead of counting on you. Next, your everyday checking, the account your paycheck lands in and your bills flow out of. NerdWallet's top pick for 2026 is Chime. No monthly fee. Access to more than 47,000 fee-free ATMs, and it can get your paycheck to you up to 2 days early with direct deposit. Getting paid early and paying zero in monthly fees, that's a checking account working for you, not against you. The lesson here is simple. You should never pay a monthly fee just to access your own money. If your checking charges you to exist, that's your sign to shop. Now the big one, where your savings should live. This is where that 4% magic happens. The top-rated savings accounts in 2026 come from online banks. Names like Ally, Marcus by Goldman Sachs, and Discover consistently pay in the 4% range with no monthly fees. NerdWallet's top-rated savings this year, Newtek Bank at 4.2%, was so popular it temporarily stopped taking new customers. That's how hungry people are for a real rate. The move is simple. Keep your everyday cash in checking and park your emergency fund and savings in a high-yield account earning 4%. Your money should never sit idle at 0.01 again. What if you've got money you won't touch for a while? That's where a CD, a certificate of deposit, comes in. You lock your money up for a set term, and in exchange, the bank pays you a fixed rate that can't drop, even if rates fall. For CDs in 2026, Marcus by Goldman Sachs is a standout, competitive rates and low minimums. And here's a twist. Short-term CDs, think 3 months to a year, are actually paying some of the best rates right now. The trade-off is access. Pull the money out early, and you'll usually pay a penalty. So a CD is for money with a deadline, not your emergency fund. Now let's talk about the banks that aren't banks at all. Credit unions. A credit union is owned by its members, not by shareholders. No Wall Street investors to pay means the profits flow back to you as higher rates and lower fees. NerdWallet's best credit union for 2026 is Alliant. No monthly fees, no overdraft fees, a huge free ATM network, and strong rates. And here's the myth buster. You don't need a special job or a military connection to join most of them. Anyone can join Alliant by making a one-time $5 donation to a nonprofit, which Alliant will even pay for you. More than 140 million Americans already belong to a credit union, and most people qualify for dozens without ever realizing it. For a lot of Americans, a credit union is quietly the best deal in banking, but maybe you actually want a branch. Someone to talk to, a place to deposit cash, a giant ATM network. That's a real need, and there's a clear winner. For branch access, Chase leads with more than 5,000 branches in nearly every state and over 15,000 ATMs. It's also known for big checking sign-up bonuses. Here's the honest trade-off. You get convenience and a physical presence, but you'll usually give up interest since the big branch banks pay those tiny rates. Our suggestion, if you love the branch, keep a checking account there for convenience. But don't let your savings sit there earning nothing, which brings us to the strategy that ties this all together. Here's the secret. The whole industry hopes you miss. You don't have to pick just one bank. The smartest money move in 2026 isn't loyalty to a single institution. It's using each one for what it does best. Use a no-fee checking account for daily spending. Keep your savings and emergency fund in a high-yield online account earning 4%. Lock money you won't need into a CD for a guaranteed rate. And if you value branches, keep one big bank account for convenience. Picture it as a 3-account team, a free checking account for your spending, a 4% savings account for your cushion, and a CD for money with a date on it. Each does one job better than any single bank could. Banks want everything in one place because it's easy to underpay a loyal, distracted customer. Splitting your money across the best account for each job can earn you hundreds of dollars a year. It's your money. Make every dollar work. So how do you actually make the switch without the headache? 5 steps. 1. Open the new high-yield account online. About 10 minutes. You'll need your ID and your old bank's routing and account numbers. 2. Link your old account and transfer your savings over. 3. Move your automatic bill payments and direct deposits to the new account. 4. Leave the old account open for a month or 2 so nothing bounces while payments switch over. 5. Once everything's flowing, close it or keep it as your branch account. Your call. That's it. A little paperwork today, hundreds of dollars a year for as long as you keep it. Few things in personal finance pay this well, this fast. Let's lock in the winning moves. Do these. 1. Make sure any bank you use is FDIC insured or NCUA insured for a credit union up to $250,000. 2. Keep your savings in a high-yield account earning around 4%, not 0.01. 3. Refuse to pay monthly maintenance fees. Plenty of great accounts charge nothing. And 4. Don't be afraid to use more than one bank. The best setup is a small team of accounts, each doing one job well. 4 simple moves, and together they turn your bank from a place that quietly costs you into one that actually pays you. Now the don'ts, the mistakes that keep you overpaying. Don't leave your emergency fund in a big bank savings account at 0.01%. That's free money left on the table every single day. Don't stay somewhere just because it's where you've always banked. Loyalty is exactly what they're counting on. Don't pay overdraft or monthly fees when no-fee options are everywhere. And don't assume a bank with no branches is unsafe. If it's FDIC insured, your money has the exact same protection. Avoiding these 4 traps is worth more than almost any budgeting trick because it works automatically in the background forever. So, what's the best bank in America? Here's the honest answer. It's not one bank. It's the right account for each job at a bank that pays you and doesn't nickel and dime you. The biggest names are convenient and everywhere, but most of them pay you almost nothing and still charge fees. The online banks and credit unions pay 4% or more, charge little to nothing, and are just as insured. The best bank isn't the one with your name memorized. It's the one that treats your money like it's worth something. Because it is. You just have to be willing to move it. Let's put it all together. The best banks of 2026, by the numbers. The Big Four hold about $10 trillion and serve half the country, but pay as little as 0.01%. The national average is 0.38. The best online banks pay over 4%, hundreds of dollars a year on the same balance. Best overall SoFi, best checking Chime, best credit union Alliant, best for branches Chase, best for CDs Marcus. Every account we named is federally insured to $250,000. The winning play, no fee checking, high yield savings, and stop leaving money at 0.01. Here's the bottom line. The best bank isn't the biggest. It's the one working for you instead of off you. Now you know exactly how to find it and exactly how to switch. At USAFinance, that's the whole mission. Give you what you need to get, keep, and grow your money. Sourced and in plain English. If this earned you a better rate, subscribe. It's free, and it's how we keep going. And next time, we go global. We'll take on the biggest banks on earth and ask how American banks really stack up against China and the rest of the world. I'm Don Blake. Make your money work. We'll see you next time.